get started on what we want to talk about today. So we are just super passionate about helping buyers save money on their mortgage, and I think sometimes it gets to the point where they are like confused. I know I am with like taxes when it comes to like talking to my CPA. When he starts talking, it's just over my head. So we really wanted to find a simple way to explain to you guys 5 ways you can save on your mortgage after you purchase a home. So the first one, what's the biggest one you think?
So the biggest thing is going to be dropping that PMI. So you might have heard us talk about that, you know, through the process of, you'll also have your PMI that you pay monthly. And what that is your private mortgage insurance. So once you reach that 20% value in your home, you're able to drop that PMI, and it can save you a couple $100 a month. Just depending on how much you of your monthly payment is made up of that private mortgage insurance. So basically all you need to do is you need to call your servicer, whoever's servicing your loan right now, and say, hey, I think I've hit my 20% equity, I need to drop my PMI. And sometimes they'll ask for some comparable sales, email them over, and then they'll get that process started of getting that PMI off. That's the biggest one.
Yeah, that's great. Yeah, it's huge. I mean, that can save you a couple $100 a month right there. And you may be able to avoid it before you get into a mortgage, as long as you put 20% down. But sometimes you can't, and sometimes people think you have to pay down 20%. But actually, like Amanda said, you can go up if your home goes up in value. And you can as well. I know you've been in your home for a couple of years.
It's been 2 years. And we actually refinanced when interest rates went down last October. And I think we're at 3.5 now, and we were able to see a huge drop in our monthly payment just from that 1% interest rate, but also that our home went up in value. I think it was like $40,000. It was crazy. In just a year. That was a little over a year. So the national market is just so hot. So we want to take advantage of that as well.
So if you can find out what your home is worth, I think that'll be huge to help you be able to drop that PMI. And then the second way that you can save on your mortgage is to watch interest rates. I know I had a client who's about to close on a house this month that got 2.25. She was able to get a 15-year loan, which is great. But even on the 30-year loan, we saw one at 2.875. And I know mine currently, my interest rate is 3.8. And I'm like, okay, I need to refinance right now, because that'll help save tens of thousands of dollars over the course of that 30 years that I have currently with my mortgage right now. So that's the second way that you can save.
And then the third way is going to be, like Erin was talking about, the 15-year and the 30-year, just comparing those options. So obviously your monthly payment's going to be a little higher with that 15-year loan because your loan is shrunk from 30 to 15, but it can save you a lot of money in the long run. So getting that house paid off early, keeping more money in your pocket, and just having that as a complete asset for you, rather than, you know, having to pay those extra 15 years. It's huge.
That's awesome. That's great. One extra mortgage payment a year, so putting that towards your principal will actually knock off 7 years of that 30-year loan. A lot of people don't know that, but you can save 7 years on that 30-year loan by paying one extra mortgage payment towards your principal. So that's another way. Or you can divide that one mortgage payment by 12 and pay that much more monthly, and that'll also knock off 7 years. So a lot of people don't know that, so that can save you thousands and thousands of dollars.
So much money.
We can definitely break it down and show you guys. So it would, that would be great.
It makes a huge difference. And gosh, 7 years, it's a long time.
So it's the small things that you do that can make a huge impact. And I mean, that's one of our
mottos. I feel like, our principles.
Just
chip away at those small things, you know? Even if it's not something that you want to necessarily do, but you just know that it's going to benefit you in the long run.
Just watching the calories, running a little bit more each day.
One more run.
It's like the compound effect. Have you ever read that book?
I haven't.
Darren Hardy. You should listen to that book.
Everyone go get it. I'm gonna go get it. Or Audible. I like Audible. You listen while I'm driving. Yes, absolutely. Awesome. Absolutely. Cool.
Very cool.
The last one, we're on number 5. Okay. So the last one is actually going to be to contact your insurance agent. If you don't have an insurance agent, just let us know, and we'll hook you up with a great one. Eric Stewart, shout out to Eric Stewart. He's a fabulous insurance agent here. So reach out to your insurance agent and see if they can get you a better policy. Have them shop around, see if they can get you a better rate, better policy, and that can also help save on your insurance portion of your monthly payment. I know personally, when we were buying our house, it was a little stressful, and everything with the loan, they were requiring all these documents, and we just needed to get an insurance policy now.
Yeah.
And there was just no time to shop around, and we were too far from a fire department. It was all this stuff started coming up, and we just went to AAA and just said, we need insurance, just help us, whatever it is. And it ended up, when we went to refinance last October, that our insurance policy was way high, like way high. So we actually reached out to an insurance agent, and he was able to do the shopping around and be able to find us a better policy and bundle our home together and our auto, which sometimes can help, sometimes it's not as good, but he was able to really guide us in that and get us that lower rate, which is huge.
And I think a lot of buyers get in a hurry.
Yeah.
Because there's like 180 things that take place in a real estate transaction. So that's just a small part of it. So if you actually have time, just take the time and call an insurance agency.
Yeah.
And we can provide that for you too. If you want to DM us, we can send you Eric Stewart's information.
Yeah.
And also have some Louisiana friends too. I also have another friend in Louisiana that can help too.
Yeah.
So yeah.
Absolutely. Yeah. It's fabulous, for sure.
Awesome.
Yeah.
Well, great. Well, now I had mentioned that it does, it is kind of, it gets to be a lot trying to figure out what direction that you need to go. So Amanda and I thought it would be a great idea to create a questionnaire to be able to help you decide like which way to go on your mortgage payments. That's what we're gonna do now. We're actually gonna role play. I'm gonna be the homeowner. Amanda's gonna be the agent. And if this is something that you guys want us to do for you, you can give us a call, you can DM us, and then we can go through these questionnaires together. So we'll get started with that.
Yeah, so we'll, like we said, I'm gonna be the agent, Erin's gonna be the homeowner, so we're just gonna role play these back and forth. So the first question I've got for you, Erin, is do you have a conventional loan or an FHA loan?
I have a conventional loan.
Okay, perfect, that's great. And what are the big differences between a conventional loan or an FHA loan? FHA is a government-backed loan, so you actually have private mortgage insurance throughout the life of the loan on an FHA loan. Now with conventional, I love that you said you have a conventional loan because that means you can drop that PMI. So kind of touching on what we talked about earlier, once you get to that 20% value, we can drop that PMI and help you save some money. And then do you remember how much you put down when you purchased?
5%.
5%, okay, perfect, that's great. So you do have some PMI on it now, but you're hoping to drop that.
Yes.
Okay.
Yeah.
Perfect.
I would love to drop that.
Absolutely.
Yeah.
And then what did your home appraise for? Do you remember?
On the one I'm talking about was 135, but
Okay.
my recent buy was like it appraised for 345.
Okay. And was that higher than the contract price, or was that right on point?
The first one was right on point. The
Okay.
second one, it was like $10,000 more it appraised
Wow.
for.
Okay,
Yeah.
it's huge. So
Yeah, super blessed.
so her house appraised for $10,000 more than the contract price, what it was, what the loan, with the money that what it was loaned on, you know. So basically, she's walking into her home with $10,000 of equity, which is huge. So you put 5% down, you have $10,000 of equity. You're building up to that 20% relatively quickly.
Oh, wow.
Plus the market's going up. Our national market is super hot, so you're gonna have that PMI off in no time.
Wow, that's great.
Absolutely. And then how long has it been since you purchased your home?
3 years.
3 years.
First one,
Awesome. Perfect. And then what is your interest rate currently?
I'm at 3.875 on both of them.
Okay, 3.875. So we definitely can get that down.
Okay.
Interest rates, like we talked about earlier, are low, and even in the low 3s, high 2s for a conventional. So we definitely can get you down.
Yeah, so this is real life.
This is real life.
Own advice.
Yes.
Refinance today.
Yes.
Yeah, I need to take the time to do that.
Absolutely.
It can change quickly. So.
Very quickly. Yeah.
Yeah.
Interest rates change daily. So gotta make sure we lock it in when when they're the lowest.
Keep me accountable, Amanda.
I'm here for you.
Back to real quick. Sorry.
And then, are you in forbearance at all?
Okay. Yeah. And forbearance, a lot of people might not know what that is, but when COVID did happen, a lot of people couldn't pay their mortgage. So they were able, their lender allowed them to go in forbearance where they didn't have to pay their mortgage for 6 months.
Yeah.
So, and that's something that we want to talk about more.
Yeah.
We might do a future video on that to educate people on what to do during forbearance.
Absolutely. Yep. So that's great you're not in forbearance. If you are in forbearance, it's no problem, but you just do have to get out of forbearance in order to refinance that loan. So just give your servicer a call, let them know, hey, I want to put it out of forbearance, start making those payments again, and then you'll be able to do the refinancing. And then have you paid your mortgage on time every month?
Yes.
Okay, good. That's a great thing. Now, if you haven't, we all know life happens and things come up. So if you did have to make a late payment, or if you missed a payment, that's fine. but you will have to wait another 12 months in order to be eligible to drop that PMI for the conventional loan. So we do like to ask about that as well. And then a lot of questions, these are a couple questions that I get a lot when talking about refinancing or dropping the PMI. So basically, do I have to pay closing costs when I refinance? The answer is yes. You will have to pay closing costs when you refinance. However, we have a wonderful mortgage company within Keller Williams called Keller Mortgage, and they're able to wrap those closing costs back into your loan when you refinance.
Wow.
So you actually don't have to pay any of those closing costs.
Yeah. And they don't have lender fees, so the closing costs are minimal.
Yeah.
You just have like title insurance and
recording fees, government taxes.
Yeah, and they can put that into the loan, which would make your loan a little bit higher. However, what you would save over that 30 years, it's huge. It's
and it keeps your money in your pocket. So, you know, hey, Christmas is coming up, holidays are coming, you know, like maybe you want more money in your pocket, but you want to take advantage of these low interest rates. It just gives you a really good option there. And just let us know if you want us to send you that link. Just reach out to your Keller Williams agent, like myself. Or Erin when she's in agent mode. And we can send you a link to get you started with that, and you can just apply online. Another question that we get is, how do I keep up with the value of your home? You know, we've talked a lot about getting the value up to 20%. How do I do that? How do I do that? Well, what we can do is set you up on a monthly market report. I think it's really great to keep up with it monthly because things change so drastically, like you just said, very quickly, right? So we'll set you up on those monthly market reports. What it does is it's gonna send you a report every month of all the activity in your area. So helping you keep up with what your value is, basically running the comps for you every month. And then another thing that we can do is do an equity checkup. Have you ever heard about an equity checkup? So what we like to do is every quarter, just give our clients a call and just do an equity checkup. And basically telling them what your home value is worth right now, if you did want to sell it, or if you're trying to drop that PMI. It just helps our clients keep up with what's going on in the market. Crazy hot market.
Because what can happen is too, like when you email your mortgage company to drop the PMI, they will probably ask you for the comp. So what we can do is send that to you for you guys.
They're definitely gonna ask for those comps.
Awesome. Well, cool. Well, that's it. If you guys want us to go through that questionnaire, we can definitely do that. And if you want us to send the link to Keller Mortgage, there are other financing companies too that you could work with. You just may have a little bit more closing costs. We can definitely help you with that. And that's it. Let us know how else we can help you guys, and keep a lookout. Me and Amanda want to get more of this.
We're gonna do some more of these. This is our first one, so bear with us.